Hey everyone, how's it going? It's Dan Russo, Chief Market Strategist at Chaikin Analytics. Tuesday morning, December 15th. Hope everybody's having a great day and a great week so far. Just wanted to come in with some updated thoughts. I think the easiest argument that you can make against being bullish right now is sentiment. Everybody's making that argument. We know sentiment is bullish. The way I like to think about sentiment is the same way I like to think about valuation. It matters such that it tells you the type of environment you're in, right? When valuations are rich relative to historic standards, pick your look back period, you know that you're in an expensive environment, right? Does that mean stocks have to go down? Absolutely not. And same thing with sentiment. Everybody's bullish. Okay, we get it. Everybody's bullish. Does that mean stocks have to go down? Not necessarily. Peter Lynch has a great quote, about more money being lost anticipating pullbacks than actually in the pullbacks themselves. And I might be misquoting there, but it's something, you get the point. It's something along those lines, which is why we always like to work with a roadmap. If we're above a certain level, odds are we're going to continue higher. If we're below a certain level, odds are we're going to continue lower. For the S&P 500, that level is 3,400. If you're looking at SPY, it's 340. If we're above that level, we think there's upside to $413 on SPY. That would be roughly 4130 on the index itself. We're in print this way. We've been talking about it for a while. For the Qs, that key level is 260. QQQ holds above 260. There's likely upside to the 340 level. We're trading around 305, 306 right now. For IWM, that key level is 170, and IWM has been the strongest. Small caps have been strong. The market has been broad. We've talked about breadth a lot in our notes, and we'll continue to do that. To me, there are opportunities in a lot of different places: small, large, value, growth, tech, energy. I think this is the type of market where you just want to have a good process for setups. Identify the relative strength. And remember, relative strength means going up more in this case, because the market is going up. There are some stocks that have not broken down, right? But they don't necessarily look great to own right now. Names like Adobe come to mind, right? The software space has been going sideways for 3 months, but Adobe has gone sideways with it. But if the market is going higher, Adobe becomes a drag on your portfolio, right? There's an opportunity cost to holding a name like Adobe when other stocks are going higher. We talk about all this every day. If you're interested, take a free trial. Go head over to chaikinanalytics.com to find out how. But I wanted to talk about the sentiment picture a little bit, because I think the knee-jerk reaction is to say, well, everybody's bullish, so now the market has to go down. I don't necessarily think that's the case. The key levels are what you want to watch. I continue to argue that we are more likely in the early stages of a cyclical bull than in the later stages of a cyclical bull, or even the start of a cyclical bear. I don't think there are many people who think we're in a cyclical bear. I just think I see the argument being made that it's too much. And then building on that, people will focus on names like DoorDash and Airbnb, the two IPOs that priced and had massive first day pops. Everyone looks at that and says, wow, there must be so much froth. Look at all the demand for everybody's chasing these new issues, and they're trading at some ridiculous multiple to sales. But does anybody ever stop and say, maybe the deals were just mispriced? All right, maybe there's a happy medium between those two arguments. As somebody who spent time at a bank, I have a little bit of an understanding of how the IPO process works. And it's conceivable that these deals were just mispriced. And we've had 19 deals this year that have more than doubled on their first day, doubled from their offering price. Clearly, the deal was mispriced, right? That means but everybody turns around and says, well, it's frothy out there. Look at all this exuberance. Look at what they did to Airbnb. But maybe it's this combination of mispricing and exuberance, and it's not necessarily as exuberant as you think. That's just a thought. That's just kind of my take on things. It's pretty much it. Those are the thoughts for today. I think it's kind of interesting that a lot of people are talking about the froth and calling it a bubble when the Russell 2000 is just breaking out of a 2+ year range. When global markets, many of them are just breaking out of 2+ year ranges. Now, we've talked about this. We've written about all of this in my notes and in my calls with clients. So I think that, yes, it's a little frothy out there. However, I think you want to use that to your advantage. Identify what the key levels are. Have a list of stocks that have been outperformers. And if overly bullish sentiment leads to some sort of pullback that holds those key levels for the markets that you're interested in, get your list out and you'll be ready to act. Those are my quick thoughts for a Thursday. Hope everybody's doing well. Happy holidays. We'll be back with some updated thoughts between now and then, but I hope everybody's well. Be safe. Talk to you soon.